A lot of you commented asking how to reduce capital gains when gifting property. So today we're going to explain this properly. Watch till the end because most people misunderstand where the reduction actually happens. The best way to reduce capital gains when gifting land is to gift it to me. Bruh. I'm kidding.
Oh my god, you're so funny.
Now, let's talk about what the law actually says. First, the foundation. Canada does not have a gift tax, but when property is gifted, CRA usually treats it as if you sold it at fair market value. That's called a deemed disposition. So simply called something a gift does not make it tax-free. Let's use an example. Bobby.
My name is Bobby. I like to party. And if you don't believe me, watch me shake my body.
Bobby bought a house for $300,000. Today it's worth $800,000. He gifts it to his daughter. Success. CRA treats that as if Bobby sold a house for $800,000. So Bobby now has a capital gain of $500,000. Now, here's the critical part. Gifting the kids by itself does not reduce the parents' capital gains. The reduction only happens if one of the legal loopholes applies. First, the principal residence exemption. If that house was Bobby's principal residence for every year he owned it, capital gain can be eliminated, even though it's a gift. But if the CRA looks at it as actual use, if Bobby rented it out for part of that time, only some years may qualify. If it's a cottage, only one property per family can be designated. If the land is larger than the CRA considers necessary for residential use, part of the gain can be still taxable. Second, capital losses. If Bobby has capital losses for other investments, CRA allows those losses to offset the capital gains. So, if Bobby has a $200,000 in unused capital losses, they used the taxable portion of this for $500 capital gains. Unused capital losses can be carried forward indefinitely. Third, timing. Capital gains can be taxed in the year they're triggered. So gifting in a lower income year can reduce the actual tax paid, even if the gain itself doesn't change. One more important clarification. The daughter does not pay tax for receiving the house. The $800,000 value becomes new adjusted cost base. If she later sells it for $900,000, she's taxed only on $100,000 increase after the gift, not the entire lifetime gain. So to be clear, gifting doesn't erase capital gains. Parents, reduce capital gains through exemptions, losses, and timing, not by simply transferring property to the kids. If you want clear, law-based explanations like this without the noise, follow Tax Mechanic. Like this video so more Canadians stop making tax expensive mistakes.
Bobby, darling, guess who?